Hello friends, in this video we will learn about what is managerial accounting. Let's see some basic concepts of managerial accounting. In this video we can see forms of business organization, meaning and importance of accounting in business organization, basic concepts and terms used in accounting, capital revenue, expenditure, capital and revenue receipts, user of accounting information, accounting concept and convention and fundamental accounting, equation, journal, ledger and trial balance. So first we can see forms of business organization. Business organization or entities formed for a purpose of carrying on commercial enterprises such as organization is predicted on a system of a law governing contract and exchange property rights and incorporation. We can say a simple language, business organization is the group of people, they are achieving particular goal of the organization. Forms of business enterprises, private enterprises, public enterprises and joint sector enterprises. Private enterprises are those enterprises which is owned and managed and controlled by private person, and public enterprises are those enterprises which is owned and managed and controlled by the government. Joint sector enterprises are those enterprises which is owned and managed and controlled by the private as well as government entrepreneurs. Private enterprises are mainly divided into two parts, non-corporate forms and corporate forms. Sole proprietorship, partnership and joint Hindu family business are the example of non-corporate forms, and corporate forms is example of cooperative society and joint stock company. And there are some different types of enterprises are here: department undertaking, statutory corporation and government companies. So we can see here some information are given in private sector enterprises. They are following legal laws and income tax act. In partnership act 1932, these are the some government rules, they are followed by the private sector enterprises. Here some examples are given by the public sector enterprises. They are also following a company act 1956. And joint sectors we are see here, owned and managed and controlled by jointly by the private entrepreneurs and government. For example, Gujarat State Fertilizer or Kochi refineries. So let's see some basic concepts of business organization. That is very basic, and first is bookkeeping. What is the meaning of bookkeeping? Bookkeeping is the recording of financial transactions and is a part of the process of accounting in business. Transaction includes purchase, sales, receipts, payments by an individual person or an organization or corporation, and these are several standards method of bookkeeping including a single entry and double entry bookkeeping systems. Bookkeeping means recording of all the financial transaction, monetary transactions in a very systematic way, and accounting. Next topic is accounting. Let's see what is the meaning of accounting. Accounting begins where bookkeeping stops. According to the American Institutes of Certified Public Accounts, accounting is the art of recording, classifying, and summarizing in a significant manner and terms of money, transactions, and events, which are in part, at least, or financial characters and interpretation, the result thereof. Accounting is the art of recording, classifying, and summarizing the whole transactions and interpreting all the data. It's called accounting. Let's see accountancy. What is the meaning of accountancy? Accountancy can be defined as the systematic knowledge of accounting that relates with the principles and techniques which are applied in accounting system. Accountancy tells us how to prepare the accounts, summarize its informations and communicate it to interesting parties. Accountancy is the systematic knowledge of accounting related to the rules and the principles, techniques to applied on the accounting system. And after then they are analyzed all the things and then they summarize and create a good information for taking a right decision in a future for the organization growth. Let's see what is the meaning of capital and revenue expenditure. First is capital. What is the meaning of capital? Capital is the money which is owned by the entrepreneur or owner for the starting business is called capital. Let's see what is the meaning of capital expenditure. Capital expenditure is the expense of the business. How we are expending capital in our business is called capital expenditure. Let's see some features about the capital expenditure. It is incurred for acquiring fixed assets for use in business. Second is it is used the earning capacity of business. And third is the benefits of capital expenditure extend to years beyond which it is incurred. And fourth is it is shown in the balance sheet in front of the asset. Let's see the exact meaning of one by one each point. First is it is incurred for acquiring fixed asset for the use in the business. It means when any business is started to purchasing asset for the business, they are using large amount of capital in the investing fixed asset. Second point is it increases the earning capacity of the business. Yeah, of course, when capital we are expenses and buy a fixed asset and material or resources for the business, so it is increases the earning capacity of the business and the benefits of the capital expenditure extend to years beyond which is it incur. And last point is it is the shown in the balance sheet in the form of the asset. Yeah, capital is the asset of the company, so it's shown in the asset side of the balance sheet. Let's see revenue expenditure. What is the meaning of revenue expenditure? When we are producing product, that time we are occurring some expense, it is called revenue expenditure. Let's see some feature of the revenue expenditure. First is it is incurred to run the business. It means daily life whatever expenses are occurred. Second point is it does not increases the capacity of the business because it is a daily life expenses of the business, so it not increases the capacity of business. And third point is usually the benefit is consumed in the period in which it is incurred, except in case of deferred revenue expense it is taken to the trading or profit and loss account of concern. So guys, in this video we are stop here. In next video I will sure come as soon as possible. And thank you so much for watching this video. If you like, share with your friends and family. Thank you so much.